If you think that what happened in the 2008 financial crisis was bad, you have no idea of what's about to happen. All of these companies would be going to jail here in the United States. Those are terrifying numbers. Hi guys, welcome back to As a Man Thinketh. Last weekend, something happened in the financial markets that got my attention. And it got my attention pretty strongly because if you think that what happened in the 2008 financial crisis was bad, you have no idea of what's about to happen. Last weekend, we saw the cryptocurrency market drop by 20%. What happened was a large seller came in and sold out of Bitcoin, which tripped a whole bunch of selling triggers all the way down. Over 400 accounts were wiped out due to margin calls. This was a significant event, but what caused it is even more significant. This is the first time I could actually say that something that happened in the cryptocurrency realm triggered my attention to look elsewhere. And the more that I looked and read about all the different reasons why the cryptocurrency market crashed, the less I believed what I was reading. But then I finally came across the cause of the cryptocurrency crash. And this cause is something that is going to affect asset classes around the world. And that is why that particular asset class crashed. That particular asset crash doesn't have much of a buoy. Now, El Salvador, of course, came in and bought up a bunch of crypto during the crash, as they have been doing on a regular basis. So I guess there is some sort of prop there, but there's no fail-safes. So the cryptocurrency market can often move in dramatic swings, but because of those dramatic swings, it told us something. It told us, hey, you need to pay attention to what's going on here. Now, for the past year, you've probably heard people talking about Evergrande. You've also probably heard big news agencies say that Evergrande is no longer a concern. It's nothing to be worried about. It's not going to impact anything. Evergrande is a real estate developer who's involved in a whole lot of other businesses and industries in China. And Evergrande has about $300 billion worth of debt that they can't pay. And it's not the first time that they've come forward and said, hey, we're probably going to default here. But this time, it's a lot different. What makes it a lot different is that China is taking this go-round significantly more seriously. Right after they came out with their announcement on Friday, well, it wasn't soon after, that the Chinese government summoned the founder of Evergrande to the capital. This tells us that what's happening is much more serious. Evergrande does not have a choice but to default and restructure at this point, and I don't see how they're going to be able to restructure Evergrande's debts. When you look at the real estate industry of China, it represents a $62 trillion industry. It is the largest asset class in the world by far. To give you a similar comparison, during the 2007-2008 subprime mortgage lending crisis here in the United States, our real estate industry represented about $25 to $30 trillion. So China's real estate is substantially larger, $62 trillion, but it gets a little bit deeper than that. The inventory in China is about $11 trillion. That's a significant amount of inventory for any market to have just sitting out there waiting for buyers. The other big problem that we're having in China is that the real estate industry represents 29% of China's GDP. I know that's hard to imagine because everybody's importing from China, but this industry, this real estate industry in China represents 29% of China's GDP. Now, you compare that to the subprime mortgage lending crisis here in the United States, and it represented about 6.5% of GDP. And you see what that did here in the United States. And what happened here in the United States actually did have a global impact. It sent the entire world into a recession. In some areas, minor recessions, in some areas, greater recessions. But what happened here in the United States with only 6.5% of our GDP impacted everybody globally. Now we're talking about China, the second largest economy in the world, And we're talking about their real estate industry crashing at $62 trillion, representing the world's largest asset class, which means there are investors from all over the world tied into this thing. BlackRock is one of them. And it represents 29% of the GDP of China. It represents over 60% of the average citizen's wealth in China. And it's on the verge of crashing. But it's not just because of Evergrande. Evergrande is just the tip of the iceberg. Evergrande is the Lehman Brothers, only by like 10 or 12. This announcement from Evergrande was so impactful that the government immediately came out with $1.4 trillion worth of easing. So we're talking about a company with $300 billion worth of debt, but the government comes out with $1.4 trillion worth of easing over the weekend. How did they do that? Did they print $1.4 trillion? No. What they actually did was they told all the banks that they could hold less in reserves, and that lesser amount equaled $1.4 trillion. So they're essentially allowing the banks to have less money in reserves, allowing the banks to stimulate the economy. So everything in China looks just like the debt crisis here in the United States, only substantially larger. We're talking about $62 trillion and 29% of GDP, and the world's second largest economy. But what happened in China is significantly different than what happened here in the United States, because the real estate industry in China is one big Ponzi scheme. And what do I mean by that? Well, Evergrande has, for example, I think it's 200, I thought I read 200 billion, maybe it's $200 million worth of pre-sold condos that have never actually been built.
It's a sight repeated across China. Scores of unfinished homes with construction at a standstill. They're the work of ailing property developer Evergrande. This week saw reports that the giant firm could fail to make loan interest payments. It's weighed down by $305 billion in liabilities. Markets and officials are worried what might happen if it succumbs to a messy collapse. People who bought apartments from the firm have a more immediate concern. They want to see their new homes finished. Fan Wanting bought an apartment at a complex in the city of Luoyang.
We definitely hope that the government will come out and give us an assurance. We still have to pay the mortgage. Our children go to school around here. The pressure on our young people is also very high. We hope that construction workers will return as soon as possible and then hand over the house as soon as possible. In that event, our lives at least have some kind of certainty.
Other buyers have been told they can't get a refund. Evergrande employees are worried too. This property salesman, who didn't want to be identified, said there had already been a lot of layoffs.
The money that was paid for those condos, representing millions of citizens in China, has been used for other purposes. They've been used to help with new projects, used to help to pay for projects that were previously sold, but they're not actually feeding into those projects that they're going into. A responsible developer would sell real estate assets and then use those funds to build that project, complete the project, and complete the sale that they put under contract. These contracts have been sold, they've been paid for, the money's been brought in, and these real estate developers, not just Evergrande, but all the developers in China are doing this. The funds have been used elsewhere. The entire industry depends on more money coming in order to cover the projects that have already been expensed, the projects that they have already supposedly built but haven't. So the debt is actually bigger than it looks, because you've got all of these pre-sold properties that are also now not being covered because the company can't even afford to pay its debt holders. Now, a Ponzi scheme depends on market confidence. You have to keep buyers coming in. You have to keep feeding the Ponzi scheme, because the second the confidence in the market falls apart, the second people stop buying. And when that happens, the entire thing starts to fall apart. Bernie Madoff is a perfect example. The second the markets crashed, the second people wanted to pull their money out in 2008, and then they realized that their money wasn't really even there, he went to jail. All of these companies would be going to jail here in the United States. But because this is a different country, because they have different rules, because they have different regulations, none of that is actually going to happen. And to be honest with you, when you look at Ponzi schemes on this level, it happens everywhere, even here in the United States. We've recently seen a Ponzi scheme in our own real estate industry. We saw it just this past summer when we saw large institutional investors like Zillow and BlackRock coming in and buying up properties. They were buying up properties for well above the asking price. Why would they do that? Well, we know that Zillow lost, $500 million running this scheme? The reason why they would do that is to artificially inflate the real estate market. It's driving a market Ponzi scheme to boost prices quickly and boost the value of their assets. That is the entire reason why these companies were coming in to buy so much real estate and then in some cases be willing to sell it at a loss. Now, I believe that BlackRock has been buying properties in order to rent them out. For those of you who don't know who BlackRock is a member of the World Economic Forum. And they have an interesting article on the World Economic Forum about communal ownership and why private ownership is becoming a thing of the past. It's not becoming a thing of the past for BlackRock. And I have more to talk about with BlackRock when it comes to Evergrande that I'll get to in a few minutes. Now, last summer, Goldman Sachs released a report. And in that report, they said that the worst case scenario of a fallout of Evergrande would probably lead to a 30% fall in new starts, 10% fall in completion, a 10% fall in sales, a 10% fall in ASP, and a 30% fall in land sales. That was the worst case scenario that Goldman Sachs put out to the public. And that is the narrative that the media ran with. Evergrande is not that big of a deal. It's not going to have that big of an impact on the economy. Now, even in that worst case scenario, Goldman Sachs said that it would most likely lead to a recession, a 4% drop in GDP for China. Now, when we look at the reality of the situation, we've actually already seen a scenario play out that is worse than Goldman Sachs' worst case scenario. Instead of seeing a 10% drop in sales under Goldman Sachs' worst case scenario, in September, year-over-year sales, property sales in China dropped 36% for its top developers. That's actually really bad news. In Shanghai, property sales actually dropped to 45%, and other big cities, 30 to 40%. Those are terrifying numbers. So China has what they call a 3 red lines rule for property developers. The first rule is that they can't have more than 70% debt to asset ratio. They have a 100% cap on debt to assets. And they have a 100% cap on debt to assets and short-term debt. Over 60% of China's developers have at least crossed one of those red lines or are currently across one of those red lines. I want you to imagine a market that already has $11 trillion in assets that are unsold, a $62 trillion industry going into liquidation. Even when you're just talking about $300 billion of that, it doesn't take a large percentage, but maybe 1 or 2%, to actually cause the market to decline substantially. Buyers, the reason why people stop buying and sales drop so much in September is because buyers have already lost confidence that the market's going to continue to go higher. Instead, they're waiting for the bottom to fall out to invest in real estate. Buyers are waiting. They're not wanting to buy at current prices. So it's going to drive the market down. Just the sentiment of the buyers is driving the market down. The $11 trillion worth of assets that are available on the market are going to be driving the market down because it's 1/6 of this $62 trillion. But I think what we're actually going to see in this house of cards as it comes down is a domino effect. This large corporation, Evergrande, is going to cause a domino effect for all these other developers who are already over the red line quotas. the developers who are already in trouble. 60% of this $62 trillion industry is already in trouble. They're already in trouble, and they're having to face this crisis, a debt crunch crisis, where assets are going to tremendously drop in value. And when we look at corporate bond defaults in China, they have gone up astronomically since 2018. When you look at this chart represents corporate bond defaults in China for the first half of 2021. The second half of 2021 is actually significantly higher, which means 2021 is going to set a new default record for defaults, corporate bond defaults in China. This is a massive problem, and it's a massive problem that is going to be exacerbated by Evergrande. And when you look at these numbers, by order of magnitude, Lehman Brothers doesn't actually even hold a candle to what is happening in China. The roots of this problem run very, very deep, and they run so deep that every country and around the world, every citizen should be losing confidence in their economy, because China is a global market economy. Let me put this to you this way. China buys and imports most of our agricultural products. They buy agricultural products from countries all around the world because they can't supply enough agricultural products for their own population. If China's economy drops, what happens to agricultural sales? All of us depend on China for electronics. Every battery, every knife, a lot of the clothes that we wear, almost everything comes out of China. Made in China. Made in China is everywhere. Every tag, everything you pick up, it comes from China. What happens to our supply chains? What happens to all of this technology? What happens to the chips we need and everything else when China collapses, when the economy of China collapses because the largest asset class, not just in China, but in the entire world, is collapsing? What happens then? What do you think is actually happening right now in China? And do you think that that is not going to have an impact on you? I can tell you that if China collapses, if the economy of China continues to roll into a deep recession, which it's highly likely it will, in fact, it's very unlikely it won't, especially because of this Evergrande scenario. It's already been dipping into a recession. Evergrande is just a symptom. They're just the big one that everybody knows about. But China's economy has already been slumping. What do you think is going to happen when this spirals out of control, which it's going to do in 2022. We've been seeing this happen. Like I said, the corporate bond defaults in China have been happening since 2018. We're now to the point where it's fallen off a cliff, and that cliff happens in 2022. So all of these supply chain disruptions that we've been experiencing lately, all of these are going to really hit home for all of us. Made in China could very well become a thing of the past by the time this is all said and done. And that's another scary topic that I'm going to talk about in just a moment. The entire Chinese economy is a giant Ponzi scheme that is spiraling out of control. People have lost their confidence. They've stopped buying. Corporate bond defaults are skyrocketing faster than anything we've ever seen in history. And yet what I find interesting is that HSBC and BlackRock actually bought more Evergrande debt this year. With all of this information out there and all of this happening, some of the largest asset groups in the world purchased more Evergrande debt. Why? Why is it? Is it because that they're so tied to this and that Evergrande's tentacles actually reach out across industries so far that just this $300 billion drop in value is going to actually impact them? Is that why? Or is it because we know that this entire thing is about to fall through and these companies are setting themselves up? You have to remember, BlackRock is one of the largest asset managers in the United States. And a lot of their assets came from the 2008 financial crisis. They took over AIG. They took over a lot of assets that nobody else wanted, and it made them rich. It made them very rich. This is a problem that we've been seeing since 2018 in China. Evergrande is not a company that just hit the news this year as falling apart. Evergrande has been falling apart. Anybody who has been following the markets, who understands how money works, how the economy works, can see what is coming. They could see what's happening with Evergrande. They could see what's going on. And there are winners and losers and everything. My theory is that these groups are making bigger investments because they're positioning themselves to win. They're positioning themselves to win on a catastrophic financial event that's about to unfold, starting in China and then cascading across the world. Because when companies can't get their parts, when people get unemployed, people are going to lose their jobs around the world due to the fallout in China. Now, there are some people who are hoping that when something like this happens, if something like this happens, which I'm pretty sure we're to the point of saying when this happens, we're going to see a great financial reset, a great reset in resources. Over the next few weeks, you'll start to see what that reset looks like. The Chinese government is going to come in and nationalize a lot of those available properties. You're going to start seeing the communal nationalization of private assets and private interests. Large asset management groups will be put in charge of those assets, and they'll manage them for a fee. But I think that we're also going to run into some other problems with all of this. I recently did a video talking about how capitalism is power. We know that China and the United States have been in a power struggle for years. I think that this event is going to push China into a tough corner. Now, President Xi, he's taken care of because just like Putin did in Russia, he made himself a lifelong dictator of China in recent months. He's unremovable. Nothing will ever happen to his power in that country. But his country will vastly lose power around the world when they no longer can manufacture the goods that all of our companies need to process and manufacture their goods. And when they lose their trading ability because they can't afford to buy all of our agricultural products, that's also going to hurt their power position. China is in a very, very tough position when it comes to maintaining power with a collapsing economy. And I think that this collapse is going to be extremely desperate for China. I think it's going to be bad for all of us. I think it'll put the entire world into a recession. But it's going to be far worse for China. It's going to be far worse for Xi. So how is he going to maintain global authority, global control, global power? It shouldn't surprise you that China has recently started to build a base. We just heard this last weekend as well, but they're building a naval base on the Atlantic Ocean in Africa. They're also planning on taking over Taiwan, and they basically told the United States that if we interfere with that, there'll be consequences. China has amassed one of the most powerful militaries in the world, and regardless of what you think, it is one heck of a match, if not outmatching the US. Their ally is also extremely competitive, that is Russia. The two together are literally unstoppable. As we see this financial meltdown and this financial crisis, there will be a competition for global power and global control. Because it's not just going to impact China, it's going to impact everybody around the world, and we're already in a tough spot. We've been pumping trillions of dollars into the market just to keep our markets afloat. There's no way that we could handle another financial catastrophe, but there is no bailing this financial catastrophe out. It's going to happen. Even if the Chinese government stepped in and completely took over Evergrande tomorrow and said Evergrande has now been nationalized. All of its assets now belong to the Chinese government. It's not going to stop the overall fallout of that $62 trillion asset class, which is going to have a cascading effect all around the world. And I can tell you that when China gets to the point where they can no longer afford to import food for a starving population, things are going to get extremely desperate. This is something that I think everybody should follow. Just like everybody should be following what's happening on the border of Russia with Russia and Ukraine. And, there's no telling which propaganda is the correct propaganda in these situations, but we should be paying attention to what's going on, because when it comes to being self-prepared, when it comes to our own personal finances, what's going on in these areas are going to impact us. They're going to impact us dramatically. Evergrande is going to impact everybody dramatically. I mean, this is a very, very, very big fall. When this house of cards comes down, it's taken a lot of house of cards down with it, and everybody, I think, right now is living in a house of cards. So stay tuned, but I think that 2022 right now is setting up for another financial crisis, one that I don't know how. I don't know how they're going to keep pumping this thing up. I think that at some point in time, the public is just going to completely lose confidence in the system. I think it's already starting to happen. And so what's going on is actually a very big deal. With that said, I hope you guys have a Merry Christmas and a Happy New Year.